All right, folks. Today is March 8th, 2020. We're looking at the futures market here like 10:30 at night. Futures market is looking pretty bloody, but no need to panic yet. With the futures being down 5%, that'll put something like Harbor Capital down closer to 20%, 22%. That's considered a bear market, folks. I don't think the president and the Fed are going to let the markets hit bear territory in this week. I could be wrong, but if they let it hit bear territory, there's going to be huge panic in the markets because the markets have been coming down too fast, too far, too fast. So that would be like over a 20% drop in less than 2.5 weeks. So if it does that and it hits a bear territory, that will be considered a market crash. I don't think that's what's going to happen, but we will see. No need to panic yet. So we're looking at the futures now. I'll check the futures again in the morning before the markets open, and then we'll check to see how the markets are doing. If the markets are still taking a beating, we have to look to see what oil's doing. I think oil's down 30% so far today. That'll put it at about $31. The target price for oil is about $25 to $27. So it had probably another 20% to fall. But if oil falls 20%, stock markets may fall another 5%. So we'll see how it turns out. Monday, we may have to move to 100% Putnam stable value in case everything starts getting crazy. And in case they let the markets go below 20% from their all-time highs. I don't think they're going to do that because globally people will panic because it is considered a bear market. So I do not believe they will let that happen. I think if we're down 5 or 6% on Monday, we may possibly be up 4%, 3 to 5% on Tuesday, just to keep us from being down over 20% for the week. And then we may go back and forth for the rest of the week. But I do not believe we are going to hit 20% from our all-time highs this soon. Oil's already down like at least 50% from its all-time high. We're not going to count that. We're going to count the markets. The Dow, S&P 500, NASDAQ, Russell 2000, or in our case, IWM. Those are the markets we're counting. I don't anticipate them being more than 20% down this fast. If they are, we know what to do. We'll just move over to 100% Putnam stable value and let everybody else take the rest of the losses. So if the markets do get down 20%, we'll have about maybe like a 7% loss. The markets will have a 20% loss. If they keep selling off, the markets might have like a 40, 50, 60% loss. We'll still be at just a 7 or 8% loss. So we're still doing good if you keep it in perspective. So no need to panic yet. But if the markets sell off today, if the markets sell off on Tuesday, it will be time to definitely move to 100% Putnam stable value. I'll get back with you later on. Thanks for watching. Like, share, comment, and subscribe. Later. All right, folks. Today is March the 9th, 2020. We're still looking at the futures market. Last night we had trouble with the U.S. bonds. So this 10-year bond is what everybody is watching. 10-year bond was down to a 0.35. I think on Friday we left off, it was like a 0.6, 0.7. Earlier in the week, it was like a 1.15. So this 10-year yield has been dropping, which means a lot of people have been buying it. When they buy the 10-year yield, buy the 10-year bonds, the yield decreases, the price increases. So people run here for safety. They come here when they're scared. So a lot of people in the markets are getting spooked. This is one of the reasons why we had trouble last night in the futures. The futures got down to minus 5%. Once they hit minus 5% in the futures, all trading stops until the prices get above that 5% threshold. So I'm expecting the Fed to step in early this morning to try to get a handle on the markets. Because if the markets finish too much below 5%, they will be in a bear market. I don't believe that's what they want to do today or anytime this year. I don't believe they wanted to get into a bear market this year because there will be more panicking and the markets will continue to sell off. So I expect the Fed to get in here, stabilize everything over the next week, and for this market to continue to go up. If not, it's going to be pretty ugly. So everybody's buying the U.S. 10-year Treasury yield or bond. They're running for quote unquote safety. There's another piece to the puzzle. Let's show you that real quick. Okay, the other piece to the puzzle causing a lot of havoc last night is oil. Oil was trading, I think it got down to $27.50 per barrel. This happened because of OPEC plus Russia on Friday. They couldn't agree to a production cut to try to keep the price of oil up. And Saudi Arabia start cutting some of their prices for oil, what they were selling to the United States. So there's an official oil battle going on. So the people who are laughing the most out of this little oil war is Russia. They're really the only ones who can sustain lower oil prices. Saudi Arabia is going to be the ones that get hurt the most. But as of right now, until they get this under control, there's a free for all for oil. That means that production should be drastically increasing. The demand for oil is down. So if you increase the supply of oil too much and the demand is down, the price of oil has to come down. It's like basic economics. If the price of oil goes down, remember, the price of oil is related to the stock markets. If the stock markets want to go up, the price of oil has to go up. The price of oil was down at most 30% last night. So with the oil being down 30%, that caused panic. With people buying the 10-year Treasury yield or Treasury bonds, they run there when they're scared, so that's more panic. Then the stock market starts falling. It falls, it hits that 5% max that it can fall in any one session. In the futures, the market stopped trading last night. So I'm expecting the Fed to jump in here, dump a whole bunch of money into the markets to try to get it under control. If not, the markets will stop trading if they hit the 7%. If they hit a 7% down after 9:30 this morning, the markets will stop trading for a little bit. When they open back up, they could fall another, I think it's another 6% or something like that from where they left off, to be down a total of 13% for the day. They'll stop trading. After they open back up, they could fall another 7% for the day, for a max of 20% for the day. I don't think that's going to happen, because if that happens, it will be a global panic and the stock market will be down 70% before the end of the week. So I'm pretty sure that's not going to happen. I'm actually expecting the Fed to jump in here and push the markets up for them to finish positive today to stop some of this panic. Because if this panic continues, the stock market could possibly be down 75% in the next week or so. I don't anticipate that happening, but you never know with these crazy people. So that's just to explain what happened last night. We're keeping our eyes open for today. I expect the Fed to jump in here, keep these markets from selling off, because they will be hitting a bear market. Remember I showed you like a Harbor Capital and Dodge and Cox? I think Dodge and Cox is already down 17% for the year. Harbor Capital is down 15%. So if this loses 15 or 5% today, or more than 5%, both of those will already be in a bear market. So I don't think the Fed wants that to happen. I'm thinking this is a major fake out. I think they wanted the price of oil to get down to about 27, maybe even 25. And then it'll start going up from there. I also think that this day will be just like the day that Trump won the presidency back in 2016. Overnight, that's the last time the markets had to stop trading, because it was such a surprise to everybody. The market stopped trading. But then the very next day, by the time the markets opened, the markets finished up 1.5%. So I anticipate the same thing happening today. But I did move to 100% Putnam Stable Value because of all the uncertainty. So I suggest that you move to 100% Putnam Stable Value until we can figure out what the heck is going on here. Thank you for watching. Like, share, comment, and subscribe. Later.